Under SEBI Prohibition of Insider Trading regulations, which of the following entities is not necessarily considered a connected person? Here are your options. A. An employee of the company. B. An external auditor of the company. C. A shareholder with 1% ownership. Or D. A banker of the company. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. A shareholder with 1% ownership is not necessarily a connected person unless they have access to unpublished price-sensitive information, UPSI. Which of the following is a key function of SEBI in relation to insider trading? Here are your options. A. Ensuring fair valuation of securities. B. Preventing market abuse through monitoring of trades and disclosures. C. Regulating high-frequency trading algorithms. Or D. Setting stock price limits for publicly traded companies. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. SEBI regulates insider trading by monitoring trades, ensuring compliance with disclosure norms, and investigating market abuse cases. What is the penalty for failing to disclose a trade under SEBI regulations? Here are your options. A. Only a warning letter. B. Confiscation of all securities held by the individual. C. Immediate suspension of the trading account. Or D. A fine and restriction on future trading. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. Failure to disclose trades as required under SEBI regulations can lead to fines and restrictions on future trading activities. Which of the following best defines a compliance officer's responsibility regarding trading windows? Here are your options. A. To close and reopen trading windows based on market conditions. B. To ensure trading windows are closed when UPSI is available and reopen after disclosure. C. To allow designated persons to trade freely during any period. Or D. To personally monitor all trades conducted by company employees. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Compliance officers must manage trading windows to prevent trading when insiders have access to UPSI. If an insider intends to trade in securities, when should they submit a trading plan? Here are your options. A. At least 6 months before execution. B. 1 month before execution. C. After the trade has been executed. Or D. No prior submission is required. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Trading plans must be submitted at least 6 months before execution to ensure transparency and prevent misuse of UPSI. A person is considered an insider if they. Here are your options. A. Own more than 5% of a company's shares. B. Are part of a WhatsApp group discussing stock tips. C. Have access to unpublished price-sensitive information, UPSI. Or D. Are retail investors who regularly follow market news. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. An insider is defined as someone who has access to UPSI, regardless of their role or shareholding in the company. How long must a company preserve its structured digital database under SEBI regulations? Here are your options. A. 2 years. B. 5 years. C. Indefinitely. Or D. 8 years. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. SEBI regulations mandate that structured digital databases must be maintained for at least 8 years. Which of the following is a mandatory feature of a structured digital database? Here are your options. A. It should be accessible to all company employees. B. It should be outsourced to third-party firms for storage. C. it should record details of every person who has received UPSI. Or D, it should allow immediate deletion of old records after 1 year. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The structured digital database must record details of every individual who has received UPSI to ensure traceability. Which of the following is an example of a legitimate purpose for sharing UPSI? Here are your options. A. Discussing the company's financial results at an investor conference before official disclosure. B. Sharing financial data with auditors for regulatory compliance. C. Sending confidential merger details to a friend who wants to invest. Or D. Giving internal company memos to a stockbroker for analysis. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Sharing UPSI with auditors for regulatory compliance is permitted, while other actions violate SEBI's insider trading rules. Under SEBI regulations, an immediate relative of an insider is defined as. Here are your options. A. Only the spouse of the insider. B. Any person who has ever received financial assistance from the insider. C. Any relative living in the same household. Or D. Parents, siblings, and children of the insider, only if financially dependent. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. SEBI defines immediate relatives as a spouse, parents, siblings, and children if they are financially dependent or consult the insider on trading decisions. What is a key requirement for trading plans under SEBI regulations? Here are your options. A. The plan should specify exact buy and sell prices. B. The plan should not entail trading for less than 12 months. C. The plan must be submitted for approval every 3 months. Or D. The plan can be modified any time before execution. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Trading plans must cover at least 12 months to prevent circumvention of insider trading rules. If an insider trades in a security based on UPSI but later claims they had no knowledge of the information, what is the burden of proof? Here are your options. A. The insider must prove they did not possess UPSI at the time of trade. B. SEBI must prove that the insider acted intentionally. C. The company's compliance officer must provide proof of the trade. Or D. No burden of proof is required in such cases. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. SEBI regulations place the burden of proof on the insider to demonstrate they did not have access to UPSI when trading. Which of the following actions is considered a violation under SEBI's Prohibition of Insider Trading? Here are your options. A. A CEO buying shares after publicly announcing a dividend. B. A board member selling shares based on internal reports before official disclosure. C. A retail investor trading based on technical indicators. Or D. An employee selling company stock during an open trading window. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Selling shares based on internal reports before official disclosure is a clear case of insider trading. A listed company must report insider trading violations to. Here are your options. A. The Reserve Bank of India. B. The National Stock Exchange. C. SEBI and stock exchanges where its securities are listed. Or D. Its major shareholders. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Companies must report insider trading violations to SEBI and the stock exchanges where their securities are listed. Which of the following is an example of a contra trade? Here are your options. A. Buying and selling shares of different companies within a week. B. buying and selling the same security within 6 months, C. holding shares for more than 5 years before selling, or D. trading stocks based on technical indicators. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Contra trades involve buying and selling the same security within 6 months and are restricted for insiders. Under SEBI's whistleblower policy, informants who report insider trading. Here are your options. A. Are guaranteed anonymity and protection from retaliation. B. Must disclose their identity to SEBI. C. Are not eligible for any monetary reward. Or D. Must be employees of the company they report. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. SEBI protects whistleblowers by ensuring anonymity and protection against retaliation. If a company leaks UPSI, which of the following measures is SEBI most likely to take? Here are your options. A. Immediately shut down the company's trading operations. B. Impose financial penalties and enforce stricter compliance measures. C. Allow the company to continue operating without consequences. Or D. Revoke the company's stock market listing. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. SEBI enforces penalties and stricter compliance measures when UPSI leaks occur. Who is required to ensure the company's code of conduct complies with SEBI's insider trading regulations? Here are your options. A. The company's marketing team. B. The company's external auditors. C. The compliance officer. Or D. Retail investors in the company. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. The compliance officer ensures the company's adherence to SEBI's insider trading regulations. What is the role of a Chinese wall in preventing insider trading? Here are your options. A. It prevents the flow of UPSI between different departments. B. It restricts foreign investors from accessing stock markets. C. It regulates trade between China and India. Or D. It allows unrestricted information sharing within a company. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. A Chinese wall prevents the exchange of UPSI between departments to avoid insider trading. When should a listed company disclose its insider trading policy? Here are your options. A. Only when requested by shareholders. B. At the time of its IPO and on its official website. C. Only during SEBI investigations. Or D. It is not required to disclose such policies. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. Companies must disclose their insider trading policies at the time of IPO and on their official website.